Good evening, everybody. Just to kind of, emphasize the purpose or the benefits of candlesticks analysis is not only does it tell you when a reversal is occurring, it tells you what type of trend is occurring. So when we saw the bullish Haramis gap up, and the gap up through the T-line, the doji sandwich on the 50, telling us the 50 is not acting as resistance, and that this downward trend channel is not acting as a resistance. We could see there wasn't too much indecision on this way up. Over here, when we had a Morningstar signal, wasn't confirmed the next day, confirmed, then down, then up, then down, then up. Then today we had a shooting star type day, which probably implies we're still in this trend channel, and I wouldn't be surprised if we don't see a pullback tomorrow back to the T-line. Anyways, and the other side is we saw that the NASDAQ, which was holding up most of the day, was selling off right here on the near the close, but we're still in this uptrending channel. Wouldn't be unusual to see it come back down and test the T-line. So what's the market telling us? That it's kind of wishy-washy, not wishy-washy, but it's not heading straight up. It's getting there with indecision on the way up, which is usually a stronger usually a stronger trend because you don't have exuberance in the trend. You've got a lot of profit taking going on at the same time. So the other things that are influencing the markets, well, crude oil. Well, for crying out loud, I don't know whether it's me or whether I need new batteries in this keyboard. Crude oil, as you can see, is still waffling in this range. Pretty much, what are we looking at here? Yeah, we came out of this little sideways area, pulled down. Now it might be pulling back, and it should pull back up to the 50, but still keeps us in the sideways mode. Interest rates are slowly moving, or the bond price is slowly moving back up, which interest rates aren't falling out of bed, so that's not a deterrent to the markets. And the dollar is definitely backing off. It had a big breakdown, and this is why when you see this type of big signal, hammer type signal, what should it tell us the next day? They should be trading positive the next day. Well, they opened lower and came back up. That really wasn't a positive trading day, and it wasn't any signal. Remember, this is not a piercing signal because the piercing signal would have had to open below this level. Then they still showed that there wasn't any strength in here, and they couldn't get it to stay up above the T-line. So good suspicion that the dollar is going to come back down to the 50-day moving average. So on a trade basis, that means things like your euro are probably going to come back up to the 50-day moving average. And what type of pattern? Now, this is one of the things I wanted to get into more. Evan, yes, it was like a hanging man, which meant it had to open positive the next day and trade positive to stay in it. And I'll get back to those. But notice the pattern. This is why you not only want to learn your signals. There's your little doji sandwich after a bullish harami. But you also want to know what your patterns are. So at least you know where you're. Yeah, so you got a kind of a scoop pattern going on here. So your first target obviously is the 50-day moving average. And then if it breaks through there, then you've got that slingshot effect that could take you much higher, which would be implying that if the euro is getting stronger, the dollar, well, son of a gun, what's happening here? DXAM. It's still not typing the D. What? Wow. DXAM5. Okay. The dollar will probably be coming back all the way down to the 50-day moving average. So if you're trading Forex, I don't trade the Forex because it's much easier for me to trade one of the currencies in one direction versus trying to combine them. Let's see. And as you saw last night, I put a that if the live cattle open positive today, you wanted to be buying immediately. I am just not doing this right. I must be drinking way too early in the evening. So this is the exact reason why you want to know what your patterns and your signals are telling you. First of all, notice where our doji occurred, right here at the 200-day moving average. Was that the top, or was there more upside? Well, if we could look at the pattern and see there was a J-hook pattern that used the 50 as support, this made it very simple. If they opened this positive, we knew they were still in the J-hook pattern. There was going to be this type of upside move. So that even though it gapped up today, it was still a buy, and we did very well because it went up the limit today. So that was a good profitable trade. Why? Because we could analyze everything that was in this chart. A J-hook pattern, a doji. We knew if it opened positive, we'd have a doji sandwich. If it opened positive and doing a doji sandwich, it wasn't going to resist at this level anymore. It was going to make for a good positive trade. And CTEK, cotton, did kind of the double doji setup. And why would we think we're heading up? Because we're already getting the stochastics telling us we're coming out of the oversold area. And remember our simple rule, one of the simple rules of candlesticks is the bigger the signal. Look at the big bullish engulfing signal after a little inverted hammer signal. The bigger this signal is, the higher the probability there's been a change of investor sentiment. You're going to be in an uptrend. When was the optimal time to be buying? When it started going positive after two dojis, which told us the consolidation was over, that we had a kind of a double doji setup. So this is, again, why we try to know what the patterns are telling us and what's our upside potential. Well, first of all, we're going to look for resistance right in here. If it breaks through here, what do we have? We've got basically a wave 3, which should be equivalent to wave 1. I don't know what the bigger chart looks like, which would also tell us that if we drew a line up through here, kind of a trend channel, that we should be targeting somewhere up in this range. Now, is that where it's going to go? Who knows? But the probabilities are, or at least the projection is, that we could get, maybe the bigger the signals do not work for day trading, but, Gordon, I'd still kind of say, yes, they still work well even in day trading. Now, more than likely, after a big move in the day trade, there's going to be some quick profit taking, but then you look for it to head back up. Alex, once you understand what you're looking at, remember, we're looking at things that happen in human nature that we aren't looking at for the first time saying, all right, this is what will probably happen. We're looking at the stuff that the Japanese rice traders pointed out to us over the last 300 or 400 years that they've been doing this to tell us this is the way human nature works. So all we have to do is kind of memorize or identify those patterns that work over and over again. So yeah, and then again, I always tell people this is not rocket science. This is just identifying how humans, the average, not say average investor, the typical investor, which I put myself in that category prior to candlesticks, that I was always the one that was selling, panic selling at the bottom and exuberantly buying at the top. And I'd ask myself so many times, how come when I buy, everything turns around and goes the other way, and when I panic sell at the bottom, who the heck is buying that makes it go straight up from there? Okay, it is like rocket science. So, so these are the patterns we're looking for, because this is what our expectation is. In the options room, we'd recommend buying the calls right about in here. I was buying the April, I think it was the April 75s for 460. I think they're about 32 or 33 right now. So that's the type of thing that we look for. That's why right before the close, I was mentioning that I was buying WAV, because there's that little slow curve. And what do we expect coming out of a slow curve? Usually a big move to the upside. And what do we not want to see? We don't want to see, when it's supposed to be breaking out, that they reverse it. You close out the position, because this is what our expectation is a strong move to the upside. So not only do the patterns tell you when to get in, or the appropriate time to get in, it tells you when to get right back out. So fortunately, for every time I get out of a bad trade and take a small loss, I probably have a bunch where they move up big. Do these patterns typically go their own way regardless of the major markets? Yes. If you'll look, just as this as a prime example, look what this did over the last, let's say, starting from the first, and take a look at what the market did starting from the first. It was down and then back up. So remember, the patterns are developed because of the accumulative knowledge of everybody buying and selling during a particular time frame. And when they're trading up in a pattern, that means that pattern's being developed because of a bullish, bearish sentiment pressure. And if they're buying and the market's heading down, that obviously tells you they know the market's heading down, but somebody's still buying that stock. Yes, Jiva was a failed fry pan. Notice how the fry pan was setting up, but then right as we got near the breakout level, they reversed it. Now, is this one out of the woods as far as getting back in? Definitely not. This could be that J-hook pattern at another typical reaction coming out of a fry pan bottom is you get a lot of whipsaw. And then when the whipsaw is over, they usually take it up big. So I close this one out, but I'll be ready to buy this one back on the first signs of strength, because that will tell me they're taking it up pretty strong from here. How do you enter patterns where the pros are looking at the same pattern, anticipating a counter to non-pro entries? Russ, you're assuming that the pros are using candlestick patterns. And so there's always so I kind of equate it to the question, if everybody's doing this or using these patterns, don't they become ineffective? And the answer is that probably 90% of all investing in the world is done on fundamental analysis or fundamental basis. That means 10% of all investing is done on a technical basis. And right now, I could probably tell you that 1/10 of 1/10 of 1/10 of 1/10 of 1/10 of 1% is probably candlestick analysis. So right now, the field is so small, or the people using candlesticks, the numbers are so small that it's not going to affect anything. And Coop, yes, Coop is a good example. We recommended Coop a few days ago because we could see what was happening. It was starting this fry pan bottom. Now, what do we know about a fry pan bottom? It's usually not a very big price move. But right down here, if you were buying at 10.5 and it went to 12.75 up here to the 50-day moving average, that was still a good 20% move just to get to the first resistance level. The stochastics are 1233, and they're slow stochastics. Any idea why I'm not getting any audio? The volume button on the left screen is full. And, oops. Jim, can you help Bobby? It could be, but here's another little analysis that I do. Where was everybody thinking the first resistance level was going to be? Up here at the 50-day moving average. So if I'm buying down here, where's my anticipating is going to be? Up here at the 50-day moving average. So when it gets there, oops, that's not what I wanted to do. Yes, I did. When it gets there, we start seeing selling. So it hit the 50 up in here and started selling off. Might take at least half the position off. What's the worst case scenario? If they come back down and then come back up through, I can always buy back, but the probabilities say there's going to be some profit taking at the area that everybody else thinks there's going to be profit taking. Hanging man is at the top. That's kind of a hanging man, but the hanging man should have a tail 2 times greater than the body. The hammer is usually at the bottom of a trend. Do you think this will be, a breakout? Another element of when you see that big profit taking going on during the day, if they open positive the next day, you want to be buying because that tells you the profit taking of the previous day is over, still heading up in the direction you thought. Let's see, I've got WLL on here. I'll get to that in a little bit. Yeah, I see they came out with a new offering. Okay, so we're looking for situations like this, where that big price move and the timing is here. If you're buying calls or even buying the stock right here, you've got 2 expectations. 1, that if it moves, it's going to move big. 2, if it pulls back, you close out the position. IIVI was done on that basis. It didn't really pull back, so it's still got this fry pan J-hook pattern trajectory. So when you're coming out of a fry pan, there's only one simple rule. You can hold on to it as long as it doesn't close below the T-line. We recommended Mike the other day. Nice fry pan bottom. Pulled back a little bit today, but notice where it pulled back to. Didn't even get close to the T-line. It's still trading above the 3T line. Why shouldn't buy until it breaks out? Well, as you saw what happened on ESPR, this is the breakout area where the potential breakout could be huge. So if we're buying right here, it was still confirming the next day. So you could have bought on that day, or if you waited the next day, you would have had to pay up another, whatever that is, 12, 15%. So I want to buy right here before the breakout because one of 2 things are going to happen. It's going to break out big, and I want to catch that move or be in that move, or it pulls back and you close out the position. Okay, I guess we couldn't get Bobby in the right place. All right, so I go after the ones. Let's see, did I skip? We're not even anywhere close to being. There's AMPI. Came out of this fry pan bottom. Nice strong price move. And okay, we're going to do some more fry pans. And let me show a few charts that looked good. There's your gap up IMGN. Is this a good looking chart? It is, because it gapped up through the resistance level, did some profit taking. So based upon candlestick signals, we can see when the buying starts, when that candle starts turning green the next day, we want to start buying also because that tells you the profit taking is over. And why do you think this is going to be a strong move? Because they gapped it up from here all the way up to here. So there's a new dynamic in that. Why does that in IMG have a red candle is when it opens here and closes here. They gapped it up and it opened here and closed here. So what was that? What can we assume was happening once they opened it? There was profit taking on a big move, a big gap up. So when do we want to buy? We know that they're gapped up. That's a good good bullish signal, we just wait for the profit taking to be over, and then we can start buying. And we can see when the profit taking's over based upon seeing a doji or a little hammer, or even trading bullish on a bullish Harami. So we're looking for any type of signal that's telling us that the profit taking's over. Yeah, you could expect at least a 45 degree. All right, and NRX was another one that we mentioned first thing this morning in the chat room, because it looked at the little scoop pattern, and notice what turned this one around. There's your Morningstar signal. There's your doji sandwich. Had a positive open today, which told us when they opened positive right on the T-line and started trading positive, that told us right away the T-line after the doji wasn't going to act as resistance. And if we could see what was happening here and see that there was a flat handle, we know we've got a scoop pattern. So that gives us a little bit more confidence to be buying. As long as it didn't come back and close below where it opened, that tells us the scoop pattern's in progress. And why do we think the scoop pattern should be in progress? Because we've had a Morningstar signal and a doji sandwich, and we knew that today's trading should be about the equivalent of that trading prior to the doji. So it just gives you a little bit more insight as to we've got a buy signal and it's confirming a pattern setup. Gives you that much more probabilities that you're going to be in the right place at the right time. Okay. All right. Thank you, Don. When profit taken on the gap, is it more likely? No. It may come and fill the gap someday, but it may not be in that trend, and that's all we're going to be trading is that trend. It may come back and fill the gap 2 weeks later, 2 months later, or 2 years later, but we won't be in it. We'll be off doing something else by that time. When exactly in terms of dollars will the profit taking? No idea in dollars. It's more just watching the chart to tell you when the selling has stopped and the buying starts back in again. Yeah, the whole the biotech sector did trade off today, but notice where it didn't close. They didn't close it below the T-line. And notice that this is more of a belt hold type signal, and until they can close it below the T-line, we got to still assume that we're in an uptrend. So I wouldn't jump out, because there's quite a few stocks yet in the medical and biotech area, like ADXS, which we recommended yesterday, because if it opened positive today, we had a doji sandwich after a bullish Harami, and what type of pattern would that be setting up? There's our classic, the fry pan bottom, strong price move, J-hook pattern, which tells us the upside potential for this right now should be about the same as what this move was right here. And we also, I bought Cyber, because here's the strongest of all the signals. This is the kicker signal. When they gap up and start trading positive, that tells you there's been a dramatic change of investor sentiment. And where did they do it? Right here at the T-line. What do we want to see for confirmation even further tomorrow? More positive trading, because if they break this downtrending channel with a kicker signal, like they did right here when they broke out of this little fry pan bottom with a trend kicker signal, look at the price move you got. So whatever enthusiasm there was buying over here and the profit taking pulled back to here, we had a Morningstar signal. Now we have a kicker signal at the same level. If it breaks through here, we could have that same potential move as wave one, which puts you in a position where you got not only upside potential, but big upside potential. Do you still like Cyber even after? Yes. This is the signal. If they're still buying tomorrow, that means they're confirming the signal. Anytime you see a kicker signal, there's probably going to be more upside. That's why we recommended BONT the other day. We had a little kicker signal, gap up, and this is the type of move. That's your 45 degree. How long do we own this one? Until we see a sell signal and a close back below the T-line. Sean, they can say the crude oil prices. Crude oil prices could rise because the dollar is going down. Crude oil prices could rise because the rig count is dropping dramatically. Crude oil could rise because the Saudis decided they were going to cut back production. There's all sorts of reasons out there for somebody to think it could go up, and there's as many reasons for it to go down. I don't care what their reasons are. I want to see what the charts are actually telling me the final decisions of buyers or sellers are doing. Do you need to keep track of which industries are out of favor and avoid them? We heard they were selling the biotechs, so would you avoid them even though some are having rounding bottoms? No, I would not avoid them. You've got to remember, they is usually the talking heads on CNBC, Bloomberg, and they are just one person making an opinion. The opinion that we're really interested in is the opinion of the total market, of the buyers and the sellers, of whether they're buying these stocks or selling these stocks. So there's going to be some that you close out. Is this one of them? You close out because they have sell signals. And there's others that you hang on to because they're still showing buy signals. You look for a minimum of 200, yes, about 200,000. Because oil floats. Cause oil floats. Got me there, Bill. I don't know what that means. Let's see. Let's see. DVAX. Is that one of the... Oh, for crying out loud. What am I doing here that I can get so many symbols? This one. Notice the trend kicker. Kind of wave one, wave two. Now a wave can be an up move, a slow vertical, then wave three, or a sideways move, then wave three, or a pullback, then wave three. Laura, hang on to your individual ones until I tell Jim to do the double line. Then you type in the individual stocks, and we'll get to them. S-Fund also did. This is why you want to know the different patterns. A doji sandwich. We had a left-right combo down here. And one of our first indications that there was going to be a reversal is the further away you move from the T-line, the higher the probability they're going to come back up and test it. So if we're buying right here, what do we want to see up here? We want to see them get through versus pulling back. If they pull back, we come back out, hopefully at a break even or maybe a little profit on a bad trade. But if we see a doji, we have a very simple entry or continuation pattern. That if it opens positive, we know the results. Is it it's going to move in the direction how they open it after the doji, and usually the same magnitude as that day right there. That tells us they're continuing the uptrend and that the T-line is not acting as resistance. Makes for a very high probability trade. What expiry date do you recommend on your daily picks? Oh, Terry, I don't understand that question. Yes, oh, I feel that was. I was trying to think out what a storing signal was. Yes, a very strong signal because it's telling you two things. When they open it positive the next day, the simple rule of a doji is they're going to move that in that direction. How many days? Usually you like to get the doji sandwich the next day. But if the next day does kind of another little doji day, oh, this was kind of a doji sandwich. It looked more like a doji on the other charts. But notice the scoop pattern on PDS. And I think this is CPE, same scenario. These are a couple of the petroleum companies. There's your kind of little doji sandwich and your scoop pattern. So our convergence analysis is that the more elements that we can put into our analysis that there's been a reversal, like a little bullish engulfing signal, bullish Harami right smack dab on the 50 acting as support, a doji sandwich through the T-line, and a flat handle scoop. So all that evidence is that more than likely we're in an uptrend. Let's see. If that was expiration date on your options, if I'm buying options right now, I'm buying obviously the Aprils because I'm buying what the price movements are doing right now. Now, the closer we get to expiration date, like within 2 weeks of expiration date, I switch from buying calls outright to buying bullish spreads because they're going to be more, much more effective as far as the leverage, the limited risk, and the bigger percentage move. And then 1 week before expiration, if I'm looking at the calls or the puts, I'm buying credit spreads. They're not high profit trades, but they're high probability trades. Let's see, will the old support resistance be? It could be. So we know we have a strong move. We still have a lot of upside in our stochastics that we should be able to come up here. And even if it came up here to the 200-day or the 50-day moving average, that would still be approximately about a 10% move. Then we want to see if it can break through the 50, which is also breaking through this downtrending channel. What's happening here? So all we do is watch to see what it does once it gets here to the 50. And then based upon candlestick signals, we'll be able to see it with a much more clarity of what's actually happening at that resistance level. And CNET, this is what happens when the pattern doesn't work. What do you want to see coming out of a scoop pattern? You want to see that slingshot effect to the upside. If they do a dark cloud, which we know is a bearish signal, it better open positive and trade positive the next day. If it's trading down, we close out the position because that tells us the scoop pattern slingshot effect is not in effect. When your stochastic reading is over 80, do you usually sell right away? No. Stochastics are only telling you where you are in the trend. The signal, you need a sell signal in the overbought condition to tell you it's time to get out. Otherwise, you could have stochastics in the overbought condition for months if your uptrend remains in progress. So you're not trading stochastics. No, the scoop pattern, the J-hook is usually after a very strong price move. The scoop pattern is usually a fairly flat handle and then the scoop. You used to say buy on positive trading, which is, what was I looking at? Oh, let's say, which you probably will see the recommendation in the members area later tonight, to buy on positive trading on cyber. And positive trading to me is that I want to see it trading. I don't want to see it open down here. That tells me that didn't work. I want to see it open somewhere up here. If it opens slightly lower, I'll wait before it comes back up through the previous close, which tells me the bulls are still there. Or if it opens positive, it's still there. But also, I don't want to wake up and see that the pre-market futures on the Dow are down 140. That usually tells me I'm not going to be jumping into the market real quick, and I'll see what the stock does. If I bought the stock today, where's the likely place where this broke out to tell me that the bears are still in control? I wouldn't want to see it close back below the T-line. No. It moved 620 today, but if this is wave 1 and this is starting wave 3, that's 6 points. Could have another 45 points to the top of it. Where do you find the pre-market futures? John, if you just turn on your TV to Bloomberg or CNBC in the morning, they usually have the futures going across. And a lot of the, I think TradeStation, I know Thinkorswim has, you can put the YMs, which is the Dow futures, up on one of your watch screens, and it will show you what whether they're trading positive or negative before the market opens. What futures do you look at to gauge which direction the market might move? The YMs, that's the Dow futures. And then you've got the Qs also telling you what the NASDAQ's going to do. Okay, whiting. Whiting for a long-term hold is still in progress, except tonight, right after the close, they announced that they're putting out a new offering, and it was trading down here around the $33 area. Now you have to watch. Let's see, I don't know where it's. You have to watch to see how it opens. Remember, this isn't affecting the trend. It's a knee-jerk reaction because whenever a new offering comes out, what's everybody think? Oh, they're diluting the stock. Get out of it right away. But then after a day or two, they start thinking about it and say, hey, they're putting out new stock because their fundamentals right now are telling us they're growing fast enough that they need more capital, and stock is one way to do it. And usually it will come right back up again. So this has been in an uptrend. It used the 50 as support. See where it opens tomorrow and then see which way it comes up from there. Usually on a new offering, they gap it down. Then over the next few days, they start bringing it right back up again. All right, let me get to some more fry pan bottoms. AGI. Notice it came out of this fry pan bottom, and notice what started the uptrend. First of all, you had a bullish harami, or a bullish engulfing signal. Then you had the inverted hammer with bullish confirmation. Then you had the resistance right here, kind of a doji, but not quite, but they gapped it open. So you can't have kind of a scoop pattern. Where's your next likely target? Everybody's watching up here at the 200-day moving average. And LGDT. What happened there? LQ. Aha. Nice little slow fry pan bottom. So what's the risk-reward factor here? If you're buying on positive trading tomorrow and they're breaking it out, your next target is up 20% or so up toward the 200-day moving average. What you don't want to see is a close back below the T-line. That's a lap. And we did Coop. Coop was another fry pan bottom that we identified, or I guess David L. identified. Notice how it started its uptrend. An area is your doji sandwich, another doji sandwich at the breakout level. Where was the likely target? Up there at the 50-day moving average. Why shouldn't the buy be a break of the left side on an LQDT? Yeah, but you're right here. Here's kind of the fry pan bottom. You've kind of broken out right there at that level. That's the pattern I'm looking for. This really isn't a pattern over here other than consolidation. That's the pattern that I'm looking for the breakout. And it doesn't really matter whether you're buying right here or right here. We know that we have a fry pan bottom. What triggers a fry pan bottom breakout? A big price move coming out the other side. We don't know whether Coop is identifying exhaustion. It's not quite a shooting star, but it was profit taking up here. That would have been the area to start taking half your position off. So tomorrow we have to wait to see what it does. If it opens positive, you want to be buying because that tells you the profit taking when it hit the 50 is over. The fry pan bottom is still in effect. If it opens lower, that tells you at least it's probably coming back to test the T-line, which is what we call the bobble. As soon as it hits the first resistance, it comes back. If it supports at the T-line, you get ready to buy it, especially if it comes back up through the resistance level. Is there a specific pattern before a gap? No. The gap is part of the pattern. It's above the Bollinger Band, so it may go down. Then set you got to decide what you're trading, whether you're trading the Bollinger Band or we've had John on here a couple of times, and he's one of the first to say that the Bollinger Band just tells you what your probabilities of the range are, but the patterns tell you what expected results should be, which is very high price moves. Yes, but the other side of the coin is that's why you want to learn your patterns. Where you're buying a signal, usually you're looking for stochastics in the oversold area. When your patterns break out, they're usually up in the overbought condition. Does open positive mean open above today's close? Yeah, or in that range. What you don't want to see is if you're ready to buy on positive trading tomorrow, you don't want to see it open down here because that tells you the bulls aren't there right now. You don't want to get in it. Let's see, what else? We did Coop. We did MX. Another fry pan bottom setting up. I'd be ready to buy this if it broke out through this range because if they pop it back up to here, that's still a good 30% move. And then if they take it all the way up to the 50-day moving average, you're looking at over 50% move. Yes, Chuku, you can use whatever you want to apply to candlestick charts that improve what you understand or what you think is better probabilities. All right, let's see. Whoops, I'm getting Coop, MEMX, IOC, which is one of the refiners. There's your little scoop type pattern. There's your doji sandwich. And what do we expect after a doji sandwich? More upside. If we have more upside, breaking this down in our trend channel, slingshot effect should take you up to the 200-day moving average. Notice how this bottomed out. Doji, 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 left-right combo, then a doji sandwich. These are all combinations to tell you the bulls are definitely taking control. Do you buy candlestick signals or pattern breakouts? Both. There's going to be conditions in the market where you have to be buying the bottoms because the market's been backing off. And then there's other times in the markets where the market's in an uptrend. The patterns are going to produce much higher profits than just buying an uptrending stocks. Take a closer look at LQDT. Yeah. Oh, yeah, if you're looking at this, no, this is just because this is CQG. This service is delayed during the day for stocks, which I don't use this service for trading stocks. I use it for commodities. I've got plenty of other stocks or other chart services that I trade stocks, which are much less expensive. CQG, I pay a little over $1,000 a month for this service because of the graphics and because of trading commodities. Is that a kicker today on IC? I don't think so. I think it's just a doji, kind of a little doji sandwich. Oh, on IOC. Okay, IOC. IOC, anytime you see a doji followed by a bullish engulfing signal, that's your left-right combo. Doji is indecisive. That's like your little left jab. Bullish engulfing signal tells you exactly what way they're going. A big roundhouse right tells you which direction they want to go. A doji sandwich is a bullish day and then an indecisive day, usually a doji, and then we have a simple rule of a doji. The price will usually move in the direction of how they open after a doji. So if they open positive, we know the probabilities are they're going to move positive, and usually this day right here and this day right here, the candles are usually the same magnitude. And if they're the same magnitude, then you can identify what type of patterns it's confirming. Russ, yes. Each person has to develop their own trading style because of their schedule. So if I couldn't sit by the screen all day, I'd put a buy stop at where I wanted to buy, but then I'd have to check at least once in the morning to see if I got executed, and then I'd put a sell stop to tell me, all right, that price should not come back down to this certain level, which would tell me that the bears are back in control. I want to be right back out of that question. Do you still cover gold and silver? Yes, gold, whoops, I forgot what I just did. Gold, after this big long-legged doji, and then gap up, you're still in an uptrend with the anticipation there's your next target. And silver, we got gold and silver today. Well. That's just great. The transportation index came back hard today, which we needed to see the breakout through this level to tell us we're in a new trading range. With it selling off like this, tells us we're still in a sideways mode in the transportation index. Mike, I'm not aware of Online Trading Academy, but no matter what trading system you use, if you overlay candlesticks on top of it, it's going to make you see everything a lot more clearly. Let's see. Yeah, we will. I think we've tried to do the entry and exit strategy. I was going to do TA. All right, TA. TA was kind of to illustrate the fact that when you have that gap up move, especially off a little indecisive signals, you're usually going to have a 45-degree after that, which is exactly what's happening in rally, where you had this big move. I would expect a 45-degree, probably the same trajectory as what the previous trend was prior to the pullback. The bigger this move, the more compelling it is that you're going to have an uptrend after that. All right, and what is that? Doji sandwich. Doji sandwich. Anytime you see a doji sitting right on a resistance level, again, the simple rule of the doji is it's going to move in the direction how they open it. This makes for a very good trade because this candle right here and this candle right here will usually be the same magnitude, which means if they've gapped it up and broken it out, that's telling you that everybody else can see that they broke it out, and for some reason they gapped it through that level, they're buying. That's exactly the reason why we recommended GL or live cattle today, because it did a doji right here at the 200. If they opened it positive, this candle right here was more than likely going to be the same as this candle right here. That was the, that's June. We were actually trading the Aprils. But this candle right here would be about the same magnitude as this candle right here, and if they opened it positive, it told us the 200 wasn't going to be in effect anymore as a resistance level, and that our J-hook pattern is still in progress. Let's see. Oh, for crying out loud, I can't hit 4 symbols without goofing up one of them. Oh, this was more of a doji sandwich on 8. Or right here, kind of an indecisive day, right at the breakout level. And a breakout level is any time you can see where there's a trend line or resistance level. Watch to see what it does, especially if there's a doji at that level, because that's going to tell you exactly what's happening. That's why we were recommending ADXS this morning on any positive trading, because you had your bullish Arami smack dab on the T line. We already had the setup. Again, this is why you want to know your setups. This is our classic, which is a fry pan bottom, which caused a very strong price move. Then we have a pullback, which if it doesn't pull back decisively, gets ready for our next move. So that means our J-hook pattern's in effect, because that's what we expect after a strong price move. And so the classic is the fry pan bottom, strong price move, pull back, J-hook pattern, get ready for wave 3, which will be equivalent to wave 1. So if you understand the classic, you get ready to buy right in here, knowing that if you were in this and you started taking profits, this is where you get back in. And this is where I was always afraid prior to candlesticks, is if I got out here and they took it back up, I'm thinking, oh, they're not going to fool me again. They're not going to trick me back in. At least now I know when the investor sentiment is starting to turn positive again. Okay. It could be a big cup and handle. I'm looking at it more from right here as a fry pan bottom. It could be a bigger cup and handle, yes. I wouldn't want to see it close back below the T-line. That would tell me the bears are still in control. Let's see, I think we did this one. CPE, also, there's that little J-hook scoop type pattern. That's in the wrong place. And I don't know what that symbol is. Whoever wrote that has terrible. Oh, another scoop pattern. Notice how they're starting this back up. And they started to back up with kind of two dojis, and then there's a doji right on the T-line, bullish confirmation. So where's our first target? Back up here to the handle. And then there's a good possibility the slingshot effect would take it up a lot further. WPZ. Oh, I don't know what that is. I lost data there somehow. FLTX. Now this is, again, the classic. There's your big fry pan bottom. And where did it break out? With a kicker signal right at the breakout level. Uptrend, pull back. Notice as it pulled back, you had that little doji bullish confirmation. Breakout through here, that tells us we're in the J-hook pattern. We still have more upside. D, a buy stop is you have a sell stop that will get you out if a price comes down to a certain level. Let's see if I can find something that would illustrate a buy stop. Let's say I wanted to buy this one. If it broke out through this level, and I can't see what that level is. Let's say the level is $34. I can put a buy stop, meaning I want to buy this stock if it comes up through $34. So if it comes up and hits $34, my order turns into a market order and they buy me at that level. So I want to buy. That's a lot different than a lot of people say, well, I want to wait to see it pull back and then I'm going to buy right at the right time. I'd rather buy into strength knowing that it's confirming a pattern. Let's see. All right. The kicker signals, again, are the strongest of all the signals. Cyber. See, if I was buying this one tomorrow, I might put a buy stop here at $57, because if it came up through $57, it'd be breaking this downward trend channel. I want to buy it if that's showing strength. Let's see, what else we got? TCK. This is what we call a trend kicker signal. Notice how we had the big left-right combo. Then the next day they took it down. But notice when they closed it or opened it the next day. They opened it at or above the previous day's close and went the opposite direction. So even though this was at the bottom, it's what we call a trend kicker, which usually tells us that that's confirming the original signal, and they're doing it with great force. There's going to be a lot more upside. I'm trying to read what your question is, Dennis. You bought today and closed end of day, or I don't know, or CBR. I don't understand that one, Dennis. On CBR, what's the question? I bought CBR today when I saw it immediately gapping higher above the previous day's close, or the previous day's open. What does a bear kicker followed by a bull kicker imply? That whatever the reason they were trying to sell it hard, they're coming back in just as hard with that kicker signal to the upside. This is a trend kicker also. Notice how they opened it here and closed here. The next day they gapped it up and took it higher. That tells you there's a lot of strength, which also tells you the 200 is not acting as a resistance. And this little trend channel is not acting as a resistance. There's going to be more upside. And that's the reason we recommended BONT the other day, because it had a little kicker signal. And what do we expect after a kicker signal? A lot more upside. So if we know what the signals are, notice where this kicker signal occurred. Right here at this breakout level. Told us that that level was not going to act as resistance anymore. Notice what happened right here at this resistance level. A doji gap up told us that that resistance level wasn't acting as resistance anymore. And Sonic, doji, right at the resistance level. Gapped up, told us that resistance level wasn't going to act as resistance. There's still more upside to this one. And let me do a few more and then I'll get to all the questions. If you're looking for shorts, you're looking for the doji gap down like we saw in SERV today in the overbought condition, and then they gapped it down. So if I was shorting something tomorrow, I would short this one on weakness. So even if it opened up positive, I'd put a sell stop right here at the previous day's close, which meant if they came back down through that level, I'd be shorting it as it came down through. I'd be confirming that the sellers are still in control. And PTCT, which was a good buy a while back, after the big bearish engulfing signal, they have not been able to get back up above the T-line. More than likely, they're bringing this one down to the 50-day moving average. Halo, remember, the bigger the signal, notice how this is setting up as a doji. What's that tell us? If it opens lower tomorrow, then what do we have? We have a potential doji sandwich, which means they could be selling this off hard, the same magnitude as that candle right there. So if this one opened lower, I'd be shorting it with the anticipation that I'd still have some big downside movement in it. And CRMD, there's the doji sandwich below the T-line. And what's the doji sandwich tell us? There's going to be more downside. So where's your likely target now? Down here to the 50-day moving average. Zyop. Kind of a doji, spinning top, gap down. Another one that if it traded lower tomorrow, I'd anticipate they're bringing it back down here to about the 50-day moving average. If they brought it down here to the 50-day moving average, what would they be doing? They'd be filling this little gap right here. So when somebody asked earlier, don't all gaps get filled? They do, but I want to be long on this trend until I see a sell signal, and then I can now anticipate that this gap is my next target on the way down. That's another trade. ARCP. Comments on kicker and ARCP. Now the kicker was over here, and then notice what you had over here. This is what we call the flutter kicker signal. Notice where after this big down day, they gapped it up and did a doji day above the previous day's open. And what do we know about a doji? Or it's going to move in the direction of how they open it. So if they open it positive, you're buying immediately. Because if this is a bullish day, if you took out this little flutter, you essentially have a kicker signal, which is your strongest signal pattern. There appears to be little in common between all your picks, solely chosen on candlestick patterns. Pretty much, yes. What's the one factor that has been consistent for the last 400 years in human nature trading? And that's human nature. Price movements don't move based upon fundamentals. Prices move based upon the perception of fundamentals. And candlestick signals are merely the graphic depiction of what's going on in investor sentiment. Do you bother looking at weekly charts to make your decisions? Nancy, I usually don't, but we're starting to lean more toward that direction. That if we're doing a pick on something that has a good chart to it, maybe not a fantastic chart, then I'll swing to the weekly chart and the monthly chart. And let's see. I guess that's about all I've got. So let me see if there's any. How many stocks screens do you watch in the morning? I actually don't watch the screens. I have watch lists where I can see what they're doing based upon expecting to see things. And then that way I can sort them, that if I see something trading big on my watch list, then I can flip to that chart to see if it's confirming a signal. So I don't have to have all those charts up. I only have 3 charts up. I've got 30-inch screens. I just use one screen. I usually have 3 charts up on it. How do you define overbought and oversold? Stochastics below 20 is oversold, above 80 is overbought. What leads do you buy options versus shares? Just price? Oh, what leads you? Depending on the, usually on the price of the stock. I usually don't buy Amazon or Google or any of those on the stock because a 4% move on Google doesn't mean a whole lot if you bought the stock, but if you're timing it right with the options, it might mean 200 or 300% move on your options. So, I'm usually buying options on the basis there are option trading stocks, and then there's stock trading stocks. And usually the lower price stocks I usually maintain in stocks, where the higher price ones I'm usually trading the options. How many positions do you actually have going at one time? No more than probably 12. If I've got a portfolio of, say, $1 million, I don't want to have any more than 12 or 14 positions on at any one time. And on most of the accounts, I might have 90% of the prices in stocks, which might be 10 positions of stocks, and I might have 10% of the money in option trading, which might be 3 or 4 option positions. Susie Orman said you shouldn't have any more than 4% of your money in any one position, which means you have to have 25 stock positions. And I always equate it to the fact that most analysts on Wall Street cover 6 or 8, can't do that very well. How do they expect the average guy in the street to cover 25 and make money? So I usually try to keep it around 10 or 12 because I can analyze 10 or 12 charts in a matter of 45 seconds each afternoon. I don't have to spend all evening analyzing my positions. Oh, Ovis, I'm sorry. Ovis was another one that we recommended this morning. Based upon the fact that it had this big resistance level, this makes for a very simple trade tomorrow. If it opens positive, it's going to have another day like this, which means they're breaking out. And usually when they break out, not only do you get that same magnitude, but a little bit better because everybody else is seeing it's breaking out. So if this opened positive tomorrow, I'd be buying it immediately. My first scan is the very simple. I'm looking for stocks that had the biggest percent price move. And usually within the first 25, 30 stocks, I can find 2, 3, 4 stock positions that have bounced up off of candlestick reversal signals. And Then it's very easy to do scans where I can scan for stocks that are trading below, with stochastics below 20 and had a big percent price move. That means they came out of the oversold area. Then if the strongest signal is the kicker signal, I can scan for kicker signals, and usually you're not going to find very many, but when you do, they're usually very good trades. So, and all that process takes me less than probably 10 minutes each afternoon. Richard, no. It all depends. Yeah, I don't care about the tax implications because I'd rather figure out how to make 400% in my trading account and be taxed at full rate than how to make 15% in my a longer term account and being taxed at the lower tax rate. Now we do have some services on our website somewhere of people that can help you with your tax accounting, except I don't know where it is. Okay, with that, Jim, let's go ahead and do the double line. And in 4.6 seconds, do the other double line. Yep, that's true too, that I would rather pay taxes than have a tax loss carried forward. INFN. You just stay long on this, but with the doji right here on the T-line, obviously you need to see it open positive tomorrow. DMND. Uh-oh. Just stay long on this. Notice the little fry pan bottom breakout. Now you're in the 45 degree. You just stay long on this one. And DuPont, you stay short until you see a buy signal. Remember, you've had a kicker signal. No bullish confirmation at this point. And TRN. TRN, after the big, almost a bullish engulfing signal, you stay long on this one until you see a sell signal and a close below the T-line. TERP, not very exciting, but as long as it stays above the T-line, you stay with this one. And AFSI, another one that as long as it stays above the T-line, you can stay with this one. Just use the T-line as your stop. And BDSI, this one needed to stay above the T-line. This one will be very simple. If it opens lower tomorrow, you close out the position immediately. Not only does it have to open positive and trade positive, but it needs to be pretty strong to get out of this trend channel. You did have a big belt hold signal, so you should be in an uptrend, but right now it's not confirming. Twitter, you stay long. It's still not one of the most exciting stocks to trade, but I would rather put a buy stop at $50.20, knowing that if it came up through that level, it's breaking up, going into wave 3. BITA, another one that you can be buying on positive trading on a doji sandwich above the T-line. Notice your Morningstar signal. Reverse this. I would just watch your 50-day moving average as your first resistance level. BABA, I wouldn't be long or short right now. It's in a big bottoming stage. I'd be off doing other things at this point. RATA, big breakout. Notice your bullish Harami, bullish confirmation. Big move. I would expect a 45 degree to come off of there. I would use probably the 50-day moving average, which is the halfway point of this candle, as your stop. It shouldn't trade back below that level. That would pretty much tell you that bears are coming back into control. Wells Fargo, another one that's not too exciting to trade. Gap up from a doji right off the 50 Tells you just stay long and as long as that stays above the T line. STWD, scoop type pattern, trend kicker type pattern, just stay long. And EWZ, another scoop setup, Brazilian ETF. You can stay long on this, just watch what it does once it gets to the 50. WDC, Western Digital. This one has to open positive and trade positive. If it opens lower tomorrow, it tells you they failed at the 200. You might get ready to go short because you'd be in a bearish J-hook pattern. Yum. Stay long. Not a real exciting one to trade, but as long as it stays above the T line, you're in an uptrend. OPK. Is it too late to buy? No. You've got wave 1, wave 2. You're starting wave 3. If I was going to buy, though, I'd put a buy stop right up here at 1550, knowing that it broke out to the upside. XPO, just stay long. Again, there's that 45 degree after the big move, left-right combo, big move. Stay long until you see a sell signal and a close below the T line. CNC. Ooh, that probably is a bad tick. But all you can do with this one right now is stay long until you see a sell signal and a close below the T line. Tiffany's. Tiffany's, that's a tough one to trade. Now, you do have a big, huge move, so you can be buying this one on positive trading tomorrow, meaning up through the 50. Then you still use the T line as your stop. Visa. Visa is very unexciting to trade. It's kind of a flat chart. I wouldn't be long or short Visa right now. There's better places to have your money. McDermott, slow curve. Here's one that you put your buy stop at $3.58. If it comes up through there, now it's heading up to the 200-day moving average. AMWD. Nice slow curve. That's a very good looking chart. Another one that I would rather pay 64 bucks knowing it broke out. But that's a perfect kind of cradle type fry pan bottom. Enoch. Nothing here yet. I wouldn't be long or short until you see a buy signal and a close above the T line. U.S. Steel. This one you can get ready to buy. Again, it's a decent percent trader. Yeah, I wouldn't be afraid to be buying this one on positive trading tomorrow. Just don't let it come back and close below the T line. Is that Winnebago? Nice J-hook or fry pan bottom J-hook. I'd be buying this one. Again, $24 on a buy stop. I'd rather see it come up through that level. Johnson & Johnson, not going to be a real exciting one to trade. But you can stay long. Just be aware of what it does once it gets to the 200-day moving average. BGG, Briggs & Stratton. This one you can buy based on, here's your resistance level, so that's your first target, so it's not a real big percentage move to get there. But if it did break out through there, then you're now in new territory. I would, yeah, because of the lack of magnitude of this one, I'd be trading something else. Western Union, right now you stay short, until right now. Another one you could be buying on strength. If it opens up positive in the profit-taking area, notice you've had a long-legged doji, and then you've broken out through this little downtrending channel. You can be buying this one on positive trading. Beans are up in an uptrend, but getting getting near this resistance level. You can be buying this one. Just watch what it does once it gets to the 50. Sugar. Whoops. Sugar. Well. F.SU. That's K. I thought that was it. Sugar, you don't do anything yet until they can close it above the T line. You're in the oversold area. You do have a belt or a piercing signal and a doji. I'd be buying this one if it closed up above the T line tomorrow. Hogs were kind of lethargic today. Looks like it's trying to bottom, but nothing yet. You still stay short until you see a buy signal to close back up above the T line. Apple. Let's make this a little bit bigger. Apple's having a hard time getting out of its own way here. Almost looks like Apple might be in a starting a wedge formation. It broke out above this level, telling me that we're now in an uptrending channel. And did we do BITA? BITA, also you can be buying this on positive trading tomorrow, doji sandwich. Cypress, I wouldn't be long or short. No direction to it. Yeah, nothing there. And the whole purpose of using the candlestick charts is to see which ones have a pattern or a trend that we can lock onto. If it doesn't have one, just move on, because they'll always come back sometime with a new trend. VIV, and wouldn't be long or short this one. Well, I might be more apt to go short on weakness on kind of a various J-hook pattern. And Yahoo, get ready to short this one, especially if it trades lower tomorrow and back down through the T-line. Because obviously you're in a downtrend, and every time it's hit the resistance level, it's sold off. Now you've had a gap up doji, and now getting bearish confirmation. That tells me that it could still be bringing it back down to the bottom of the trend channel. Herbalife, I saw it had a decent chart today. Notice it started breaking out on your best friend signal, doji gap up, right here at the 200. So this makes it very simple. If it opens positive tomorrow, you stay long. If it opens lower, look for it to come back and test the T-line. SYY, nothing great yet. You're still in this downtrending channel, but you need a candlestick buy signal and a close above the T-line. Right now we don't have a buy signal. We just have an up day. I would wait until I saw a definite buy signal on this one. Milam Labs. You stay long. Again, not one of the exciting ones to trade because of the lack of magnitude. What you don't want to see is an open lower tomorrow. If it does, I'd probably come out of it and see what it does that time at the T-line. And EPAM. You can get ready to buy this one on positive trading. That tells me they're going to break out to the upside on this. And UVE, another one where all you can do right now is stay long. But because you've got a doji up here, if it opens lower, tells you that they're not breaking out. They're coming back to test the T-line. And Ruckus is having a hard time moving one way or the other. And with that big shooting star yesterday, if it opens lower tomorrow, you close out the position immediately if you're long. Coca-Cola. This one I don't trade because it is so slow and lethargic now because it's being an institutional trader. I wouldn't trade it. If you like it, you can be buying this on positive trading, but you're only going to go from here to here, which is about a 3% move, and that's probably not worth the risk reward. But if you like it, you can be buying this one on positive trading tomorrow. URCW. This one you can be buying on positive trading as long as it stays above the T-line. Coming up from this indecisive state and staying above the T-line. AEM. Look for this to come up and test the little scoop type setup. Loco. Notice how it bounced right smack dab off the T-line. Now, when I say it bounced off the T-line, you got to remember, very, very, very few people use the T-line. So when they move back to that level and start bouncing, that's because that's a natural support and resistance level. That's human nature. So when you take the candlestick signals, that are the graphic depiction of investor sentiment, and the T-line, which is basically an indication of human nature, that's a pretty strong combination to tell you what's going on in a price trend. So Loco, you can be buying this one on positive trading because it's already shown its support after the consolidation. Kite's having a hard time getting out of its own way. I would rather be buying this one at $75, knowing that the uptrend is still in progress. And G-Pro, you can be buying this one, but you got to still remember you're in this downtrending channel. It's got to break out, especially through the 50. And AMBA, partner of G-Pro, ever since the little cradle pattern, you want to stay long on this one. You've had a little kind of slow curve. If you want to be, you can still be buying this one on positive trading tomorrow. Did we do Twitter? Twitter, you stay long, but it's not a real exciting one to trade at this point. Again, I'd rather pay $50.20 knowing that it broke out to the upside. Guess. Well. Guess. Notice after the consolidation, there's the kicker signal. You definitely want to be buying this one on positive trading tomorrow. You got to remember, the reason you want to be buying is because this had a kicker signal, the strongest of the candlestick signal reversals, and you broke this downtrending channel, and you broke the 50. And notice 100-day moving average. SanDisk, just stay long out of this big fry pan bottom, as long as it doesn't close below the T-line. And QIHU, another fry pan bottom. You can be buying this one with the anticipation that even on a day trade, they should take this up to the 50 based upon the magnitude of this candle right here. And Fossil, you can stay long on this one also. It's broken this downtrending channel. Your next target is the 50, which would be this little channel right here. VA, you stay short. Ever since it failed here at the 50 and stay below the T-line, you stay short until you see a buy signal to close back up above the T-line. Slumberger, having a hard time getting through the 50. If you're long, you stay long, but you don't want to see it close back below the T-line. If it closes below the T-line, this downtrending channel is still in progress. It needs to get up through the 50 pretty quick to tell you that that's not going to act as resistance anymore. And NVDA, if this opens lower tomorrow, you short it. They're probably bringing it back down to the 50 and or filling the gap. With 90% puts, would you limit trade to a short? With 90% puts, would you limit trade to a short trade? James, reword that one. I don't Don't understand. Hack's having a hard time getting out of its own way here. Nothing that I would get real excited about, either long or short. Pure fun, cybersecurity. Okay. AMSG, all you can do right now is stay long until you see a sell signal. CVA, there's your scoop type pattern, there's your 45 degree. Just stay long on this one. Use the T-line as your stop. SF, another one where you just stay long until you see a sell signal. TLMR. This one's having a little bit of difficulty, but if it needs to open positive to stay in it. If it opens lower, you close it out. Remember, the further away you are from the T-line, the higher the probability it's going to come back and test it. And Juno, you stay long, use the T-line as your stop. Big price move, still expect the 45 degree of this trajectory to stay in progress. Silver Wheaton, just stay long on this one. Lilly did a shooting star today. Makes it very simple. You put your sell at yesterday's, what is today? Monday. Friday's open. If it comes back down through there, your shooting star, evening star signal is telling you they're going to take it back down to the 50-day moving average. We did Visa. Capital One, kind of flat. Here's another one. When they get flat like this, notice your stochastics are sideways. Your price is flat. There's no indication. You had a big move here. If it traded flat tomorrow, I'd close it out. Then I'd just be ready to buy it if it came back up through 62. That would tell me the next wave is heading up. The dollar has been backing off ever since this big downdraft. They couldn't bring it back up above the T-line. You stay short on this one. Oh, let's see. What's the Aussie? AUD. No, that's the Australian bond. I forget what the Aussie is over here. GIB. GIB, not real exciting. I'd rather pay for it through the 45 range, knowing that it broke out. Coles, still in a slow fry pan to the upside. You stay long if you're long, as long as it stays above the T-line. Right now, I'd put a buy stop above today's high. If it came up through there, they're starting to break out. And Rite Aid, ever since its big move the other day, you stay long, figuring you have a 45 degree and a scoop pattern in progress. KORS. You stay long on this one. Obviously, you watch to see if it can get through the 50-day moving average. Exoma. Nothing exciting here. You're in the bobble. When it hit the 50, it came back to the T-line. I would buy it if it came back up through the 200-day moving average. We did Twitter. We did that. I don't know what that is. MOV, is that a symbol? That's got a nice little fry pan bottom. This one you can be buying on positive trading tomorrow. And LO, another little J-hook pattern in progress. Another one you can buy, especially if it trades positive after the little left-right combo off the 50 and breaking this downtrending channel. Yield, nothing here. It's stuck in the wedge. You can see the wedge formation. If it breaks out to the downside, you short it. If it breaks out to the upside, you can buy it long. PAYX, just stay long. Use the T-line as your stop. Red Hat, you can be buying if it comes back up through the highs. That'd be your double doji setup. You got your evening or morning star signal, bullish inverted hammer, bullish confirmation, doji sandwich, double doji, now another double doji setup. If it opens positive and starts trading positive, you're going to have a day like this, which means they'll be breaking out through this resistance level. Nugget, look for the 50. Yes, I do hold through earnings, provided the chart tells me the bulls are still there. Remember, candlestick signals and patterns are the accumulative knowledge of everybody buying and selling. If they're buying going into the earnings report, that means somebody a lot smarter than me or knows what's going on with that company is buying. I'll go with the probabilities that they're buying because they know something. When you can buy this one on positive trading, BOFI. I would suspect this is going to come back and at least test the T-line. Lumber liquidators, we're still short on this one. We stay short until we see a buy signal, ever since the kicker signal failure here at the T-line. Zillow, get ready to short this one. Little bearish J-hook pattern failure at the T-line and the 50. That's a good little fry pan bottom. This one you can buy, provided the volume is good on positive trading tomorrow. And game, all you can do here is stay long. It looks like a slow curve getting ready to break out. EWJ. EWJ, just stay long on this one. The Japanese fund. No, buy on a positive open. So if I see something, and I forget which ones, this was Guess one of them. If Guess opened positive tomorrow, I'd start buying because that tells me the profit taking's over, the kicker signal's in progress, so I'm buying on positive trading. That's my confirmation that the pattern is working. Okay, thanks, sir. One. LPI. This one you can stay with, but it needs to keep trading above the T-line. And Geos we recommended today because of the little cradle type pattern. This one you can still be buying with the anticipation your next target is up here at the 50-day moving average. Would you short a stock with 90% PURS? You still have me guessing, James. I don't know what a purse is other than what Sandy whacked me with. Lulu, kicker type signal to the downside. This one you get ready to short if it opens weaker tomorrow. Is that the, that's the Australian bond. Let me see. Yeah, I'll have to look up, but I don't trade the Aussie here, so I never looked up the symbol. LBMH. LBMH. Another one that you can get ready to buy is not going to have a fantastic percentage move, but you can buy this one on positive trading tomorrow. You had the left-right combo, right? You did Guild. CELG. This one you get ready to go short if it opens weaker. I wouldn't short it because I would suspect the 50-day moving average is going to act as support. But if it opened lower tomorrow, I would definitely be out of it. The 20-day moving average works more effectively when a trend becomes more consistent. They won't pull it back to the 50, but they'll use the 20 as a support level. And the reason it's on here is, again, most major money managers around the world use those three moving averages, the 200, the 50, and the 20. Okay, there's the Aussie dollar. That one you can be buying. That's the index, right? That's the trust. I don't know what the actual... is it 6 AM 5? Pat, try it again. 6 doesn't work for me. I don't think. No, not found. Berkshire, nothing there. Wouldn't be long or short this one. Not that I would want to be. The oil funds are trying to bottom out, but they haven't done so yet. They're still trading just below the T-line. And EWG, all you can do with this one is stay long as it stays above the T-line. Yeah, I don't trade off the put call stock is telling me, or what the chart is telling me. It doesn't matter if there's tons of shorts. It's yeah, since I don't trade the either one. I wonder if AUD, or did I do that backwards? Yeah, that's right. With 90% puts, would you buy or sell? No, I don't buy off of those. That's a whole different trading strategy. I buy based upon what the underlying stock is telling me it's doing. Okay. Craving a Kit Kat. All right. I'll send you my cat. All right. We'll call it a night, everybody. All right. We'll see you first thing bright and early in the chat rooms. Everybody have a good evening.